Good morning, it's Graham Bibby on the 29th of July 2015. This week's market roundup is coming a little bit early because it's holiday time in my base of Phuket, Thailand. Thursday and Friday being a holiday, although I personally won't be on holiday because, as you know, I have tracked the world's stock markets every day for the last 35 years. It's what I love doing and will always continue to do. So anyway, let's get right into it. It's been a difficult week at the start of the week, but last night was a great night. This is the S&P 500, the Standard & Poor's 500. The reason I start off by showing you the US stock market, besides the fact that that's where my insiders club and I can find the most undervalued superior earning stocks, it's because the US market is the tail that wags the dog, is the expression, and that means it's it's not the whole world, but it's what the whole world looks at. So if the US falls apart, other markets seem to follow it. Although this last week or so, all eyes which were on Greece were more on China and wondering why the Chinese stock market was collapsing after investors were allowed to leverage their money 5 times. Go figure. Anyway, let's go on to this chart. So I've got a line here, this where the circle is, which shows you where the market ended at the end of last year. And as you can see, recently we were a squidge above it. And at the end of June, we were in zero territory. And the average Insider Club client has made 9.86% then, has improved on that since. So I'm really proud of the results. So last night was a strong up day, so we haven't broken below this support level. We're still in this range, and if we break out to the upside of here, we're going to be off to the races. It's going to be looking really, really good. Now, this chart's quite important because it's the Dow Jones Transport. Transport is things that move things around. So you really want this chart to be turning up. So it could be freight over the rail lines. It could be Federal Express or UPS that deliver you your parcels. But it means the economy's moving, things are moving, and that was in a downtrend. It had quite a strong night last night. It's come off quite important support around 8,000, and I just want to show you why that's so important, because this is the bottom in 2009, very strong rise from there, and then we had a bit of a correction, then we broke out here. I signaled a breakout here beginning of 2013, and then it was upward all the way until this year we're moving downwards. But this is key support around here, key support around here, which is where we've held. So it'd be great if that starts to turn up now. Don't want to make any predictions, but if it starts to turn up, that'd be great. But we need to break through up through this down channel, which is here where that circle is. That would then identify that the sector as a whole has moved up. I just want to quickly then run you through some other areas. This is the Australian stock market ETF, which has been going through the floor. It's been doing that since September of last year and has been on a roller coaster for years. That's why people aren't making any money in their self-managed supers in Australia, and more people are moving to the Insiders Club. So that ain't looking good, as they say. This is Hong Kong, which was my home for many years, going back 25 years. Again, volatility. It's followed China. Huge sell-off from May to July, and the market, has been gyrating for most of the last year and a half. We're currently around levels seen in August of last year, so no profits going on there. Whereas the Insiders Club is moving nicely to the upside. Now, I have quite a few members in Singapore. They haven't got away with it. And this is why I don't believe in buy and hold. I've only gone back 2 years, but look at this. This is the roller coaster down. This is the roller coaster up. This is the roller coaster down. This is the roller coaster up. This is the roller coaster down, up and down. So some major financial institutions tell you to buy and hold, which I don't subscribe to, because if you can be more sophisticated than that, and I can, and you have knowledge, which I do, of over 46 world markets, studying them daily, and commodities and currencies and everything from biotech to internet stocks to oil and gas. You don't have to be subject to the roller coaster markets. So Singapore ain't looking good. Hong Kong wasn't looking good, nor was Australia. Now, I just want to bang this one in there because this is uranium. And as you know, I've been a great fan of nuclear energy and uranium. But the trend, my friend, is your friend. So if the trend is down like this, I don't care what the story is. You don't make money by buying things that are falling in value. You lose money. So even though the fundamental background story of China building more nuclear energy plants, Japan going back into nuclear energy, India going into nuclear energy, the world kind of turning to that fuel, as well as we know solar and wind, the stock price is dropping. And the reason you don't buy just because it appears to be cheap is the biggest losses can be at the bottom. So where I've got the circle on the chart right now, see that circle? This uranium ETF, so it's a broad spread of uranium stocks, was 11, and right now it's just under 8. So that is over 35% fall in 5 weeks. So cheap can get cheaper, and these babies have been a lot higher. Let's show you where it was if I can, and then I'm going to finish off because I don't want to bother you too much. Here we go. In 2011 it was somewhere around $60, and now it's $8. $60 to $8. That is somewhere in the region, I guess, of about 85 to 86% of your money lost if you follow the buy and hold philosophy. Key is the trend is your friend. If it's down, we get out. If it's up, we get in. And then we use money management rules. And then in my Insiders Club main service, we use undervalued superior earnings. So this is Graham Bibby on the 29th of July 2015 at 7 minutes 48 seconds, just under 8 minutes, saying thank you for listening. The future does look bright. I've got my eye on everything, and if your advisor is not looking at your investments every day and knowing what's going on, please give me an email. Bye bye.